live from New York. It is a foul Thursday, and my colleagues are in blessed Cambridge, where I'm sure it's gorgeous as it always is.
Mm.
Um, Friends who are watching, you can ask questions. We encourage you to ask questions throughout the session. I know we have hundreds of you watching, and we'll try to get to as many as we can. But first, this has become a bit of an annual tradition at Vestigo where we take a pause to reflect on some predictions from last year and what we thought would happen, what actually happened, and then like the Greek god or the Roman god Janus, we simultaneously look forward and make some predictions, some of which will be right, some of which will be wrong for 2025 and what we can expect. And Mark, I have been working for you for 6 years, with you for 1 year, in case nobody noticed my promotion. Um, and
Very subtle, very
and
subtle.
and
Very
and during that time, it's really been the last 2 months when you've been excited about wealth tech. I would like you to unpack what has changed in your thinking.
I'd love to. And I've enjoyed working with you for the last year as a partner. It's been great. I think Wealth Tech is a lifelong set of experiences for me. Way too many years to count, and it's always been a wonderful category because you have a combination of being an economist, understanding how markets work, combined with being a bit of a social worker. How do people feel? How are they getting through their issues? It's a lovely profession that way. And technology has been applied through the 40 plus years that I've been part of it. And you get these waves in which technology makes a big difference. And we are about to hit a big, giant wave, tsunami level for us in wealth management. And that really relates to the way generative AI in particular is going to change the nature of the work we do in that profession. We've already seen this in InsurTech. We've seen the advantage that we can get by having a piece of technology do the work of claims adjusting, right? An exciting topic, but what's exciting about it is that you can get 9 times more productive than a human who was doing claims work before. And oh, by the way, you're more accurate. Like what's not to love about that? That world hasn't really come to wealth management until now. And we're seeing with one of our first investments in the space called Domify, is a chance to have at least 4 times more productive humans than exist today. They are doing work in complex products, and they're basically taking someone who's really wonderfully trained, incredibly smart, and has like the worst job on earth. Their job is to look through paperwork that an advisor submitted, and it takes them somewhere between 4 to 6 hours to do it. And with the advent of what Domify has done in generative AI for them, they can now do it in 30 minutes. That's an incredible savings of really boring work that they have to do so they can go focus on the problems at hand and get them fixed. So that's what's coming to wealth management is this huge productivity lift, and it is going to change the nature of how wealth services are delivered and their cost and the way that firms grow. So it's as exciting a time as I've seen in my 40 plus years in the industry.
Tremendous. And Ian, so Mark referenced jobs which are somewhat rote, perhaps unglamorous. You've become a bit of a guru for monetizing these kind of back office processes. You led our investment in Roots Automation. You are on the board of Formotive, which are taking on these kind of rote tasks really deep in the enterprise where privacy, security, compliance is sort of paramount. Would love your thoughts on what you're seeing from a technology angle, from a business model perspective, kind of in that world. And when you're out in the world talking to entrepreneurs, what are the kind of questions that you want to dig in to see if something's actually appealing to you?
Yeah, there's a lot to unpack there. So we've we've absolutely from our journey 10 years ago when we started to now and the investments that we've made, we've actually been part of that AI journey from machine learning to artificial intelligence. So we've experienced inside our own house as we've developed and sharpened our tools, and certainly the entrepreneurs that we've invested in from ideation to their first couple 100,000 of annual recurring revenue and building these solutions that ultimately move across the whole processing workflow environment from intake documents to the execution to the end customer. And so we've witnessed the efficiency gains and the continued learning that occurs across these models. that have led to true reduction in unit cost across the business models. So I think, we're just really at this inflection point. Mark referenced Domify, but we're at an inflection point, both for regulatory technology or RegTech, where AI-driven solutions are no longer just automating compliance, but are fundamentally reshaping how organizations manage risk, detect fraud, maintain compliance at scale, and augment decision-making. And so what started out as machine learning has now moved to these, I'll call small language models, LLMs, that are particularly transformative in this space because they offer a balance between computational efficiency, security, and domain specialization that the large models can't get to. So to come back to our portfolio, we've actually seen that journey take place where these specific models have gotten so sharp and can operate within the guardrails that are so necessary in financial services, compliance and regulations.
Tremendous. Nick, I mean, you are a bit of an agent factory here at Vestigo, a term I've been throwing around a lot over the last 2 weeks because I love it. And you and I always joke about the journey that we've been on leading the technology group of ourselves here at Vestigo from sort of line upon line of Python and then Golang that you inherited, that I built, and then as we shifted that into some of the pre-trained models like BERT, and now really leveraging the LLM infrastructure, which you can spin up in ridiculously short order. I mean, I was hacking around in Cursor today, and I have to say, like, my mind just continues to be blown by how fast I can build an app, like a real application of that. It's insane. I'd love you to chat a little bit about some of the ways we're using this technology, deploying it in-house. What things do you anticipate wanting to build in kind of the coming months?
Yeah, no, happy to talk more about that. And yeah, I feel like to echo your point, it's really been I think I continue to get surprised every week of how impactful sort of like the new advances a lot of the foundation model companies are developing. And I mean, like, even thinking of um like how fast you could prototype new agent workflows. As an example, internally, one area we've been spending a lot more time recently is how can we utilize some of the sort of open source agent infrastructure, whether it's like LangChain or Crew AI. For us, we found Crew AI is probably the easiest to prototype with. But how can we utilize that? How we think of looking at new companies, diligencing new businesses. One example that we have internally is around, if we see a company that's coming up, as long as we have the name or a domain or some inkling of a data point, we could really enrich a lot around it. So whether it's the founders, what type of customers or potential customers that they might have, and then really kind of help us streamline those processes. I think looking forward into the year. And I feel like this could change drastically as these models continue to get better. I think we were all very pleased when Deep Research got released to us GPT non-pro users. And I think like that's been obviously a huge leap in terms of how we might think about market research or thesis development and things of that nature. But I think moving forward into this year, it's really going to be focused around like how can we make our lives um, as streamlined as possible to where like all we really needed to focus on is like how can we make the most impact for our portfolio companies and our founders, like really nurturing like our networks, and how much can we utilize sort of LLMs today to even help us even nurture our networks better than we have before. So I think for us, it's really going to be focused around streamlining some internal processes, but I think what's more impactful is really just trying to help free up time for the investment team and the Vestigo team to really focus on kind of where we could be the most impactful.
And how does that inform your perspective on the kind of startups you want to invest in? It's like it feels like every year since ChatGPT dropped has been the year of something that was wrong. Like it was always wrong. It's like sort of fall of 2022 to kind of middle of 2023 was like, the LLM wrapper company will never work. And then it turns out the LLM wrapper company is like really good.
Yeah.
Curious like how you're thinking.
Yeah, I think the thing that for me at least sticks out the most, sort of think like post LLM and pre LLM companies, is the businesses that were founded sort of post LLM and obviously maybe a couple months after with the advent of a lot of the new apps that they could take advantage of. Um, I think like the new startups that are really focused and building with an AI first approach, like from the bottoms up, like and everywhere from helping on code generation to how they might think about automating their CI/CD pipelines to how they think about changing like the user experience now. Like everything wants to be more chat enabled versus you clicking on a bunch of tabs in an application. So I think as I think of companies that are more interesting to invest in, I think what we're seeing now is that it's very easy for startups with really small teams and strong engineering teams to just spin up a product and get a prototype out there as little as a month or 2 months, maybe even shorter. So I think for us, it's really focusing on can we find the right team that has been sort of AI native or has an AI native mindset, and is really focused on trying to utilize the hundreds of billions of dollars from the hyperscalers and the large foundation model providers and utilizing that technology to build their business. I think a lot of the core business models that we've seen, I think they're like those can continue to work. It's more around how they're building it, how they're thinking about building their technology stack, and obviously that leads to more efficient businesses and things like that.
Tremendous. Dave, you and I have been texting furiously with Alex Wisner-Gross all day about NVDA, GPT 4.5. Yeah,
Every day.
it's the elephant in the room, besides the fact that I'm wearing a tie.
Yeah.
And so just, what's going on?
What's going on with GPT or with
Yeah.
what? Well, I mean, 2025 is an incredible year because it's a 100x year. The big foundation models have been growing 10x year over year, which is already nutty. This particular year, you have the confluence of some incredible algorithmic improvements, but much bigger training budgets, and then the new chips, the B100 chips, which are about 3x, 3 to 4x performance at the same price point. So you got all those things happening in 2025. So by the end of this year, the big models will be 100x what they were at the beginning of the year. And I cannot tell you in terms of use cases what a mind-blowing change that is. At the same time, DeepSeek comes along and shows you how incredibly important chain of thought reasoning and mixture of experts is. And that's like a gold mine for startups because building a new foundation model now is $100 million to $1 billion kind of endeavor. We're not doing that at the startup level, but chain of thought reasoning you can do in your dorm room, and verticalizing that for any use case is I mean, this is like nothing I've ever seen in terms of opportunity. Like Nick was saying, it's not capital intensive. Time to market on a good idea has been shrunk to a couple of months. And as long as you can get an enterprise sales process or you just need the gravitas to get into the boardroom to present what you've done, which Vestigo is very good at bringing to the table. But if you can get over that, the opportunity to build a company is like nothing I've ever seen before. I mean, I thought the invention of the internet was the golden age of my lifetime. This is where I was building a company. Mark Cuban was building his company in parallel. Everything was rising with the tide. Nothing like that has happened since in my life. And now we're looking at something that's 10 to hundreds of times bigger in an even shorter period of time. So it's just a golden moment.
It's a little frightening when you think about, I think it's an old joke, which I know, Mark has made to me over the years, but you sort of go into the room with enough ambition, sell the project, and then you'll find a way to deliver the software that you've just sold. It's almost like you can go into the room with enough ambition and that by the time you actually have to deliver something, the thing that you need, the capability you need to deliver is going to be in an LLM. It's really amazing if you have engineers with kind of enough grit to push this through. Ian, you and I were talking, been talking a lot really about how our thinking is evolving around investment opportunities against where our network is in financial services, against this like shift, which you referenced earlier in terms of, deployment of SLMs into the enterprise, like, relaying on top with feature functionality from LLMs, like, what things are exciting you, or maybe not to make you be so committal, but like, where are you feeling constructive? What are you thinking about in this context that makes you interested? You're on mute.
Couple big tent poles that I see. That one, I think of AI as a real-time guardian. So that takes me into fraud detection and prevention. It takes me into automated compliance and audit trails. It makes me think about insider threat detection. You mentioned deep seek. Think of the CISOs and risk officers on all the edge devices that were flagging that day. I think the number was over 40 million people or something downloaded that particular app. So that's one tenet. The other is the AI augmented decision making. And so executives are, the way I grew up as an operator, I had my static dashboards. Dare I mention Lotus 1, 2, 3 and Excel. But now we're in AI-driven risk intelligence, platforms that contextualize the insights that we need in real time. So small LLMs, customized, as you said, they can get very specific in regulations when we think about FinTech, financial services, asset management, insurance, and brokerage. And all of this being balanced with the compliance and the security really gets me excited. From an investment outlook, I think we see, you said it well, the wrappers we discouraged early on, and that changed, but the growing opportunity in companies building AI-powered RegTech solutions, cybersecurity, fraud protection, embedded AI, and intelligent compliance automation get me very excited. And I think about the incumbents where I came out of as an operator and how they're viewing the market today. So I think we can expect M&A activity as large financial institutions and security firms will want to acquire these AI-empowered companies. And so the startups that can offer on-prem, edge deployable AI solutions, minimizing the whole data exposure and maximizing the intelligence, are really going to be well positioned over the next few years.
Mark, you've been on a plane a lot lately, which generally means that when I wake up in the morning, there is a long email from you, which is something I always look forward to when you travel, and usually means you've had time to kind of pull yourself out of managing knuckleheads like myself and Nick all day, and get to like do some hard thinking. And when you think about what we thought about last year and the future, what's evolving? Where do you think we're going to be going throughout the balance of the year?
Yeah, I think it's just an amazing time. The minute you think you've got your arms around it is the minute it's run away from you. It's much like children in my experience. They got to get to a point, then they escape from you again, and you've got to recapture them. And that's a bit of the way AI feels to me. And I am like any other human, don't like change, right? But I have had a career of change management, changing companies for the most part, or changing approaches, or whatever they're changing capital. That may be there. So that part of me just loves this particular phase because it's all about watching how the change deploys and then what it means in terms of implication. So an example would be, do you think about investing in the Domify type example or Roots Automation or Noble that are all examples of using AI intelligently in a model that we might have called SaaS, right? But what they really are is going in and enabling a bunch of capabilities across a stack, whether it's financial advisors, whether it's Ford in the case of Noble, whether it's XYZ insurance company in the case of Roots, but they go across all those different players. Another way to think about it is what happens if I change the nature of the organization, right? If I create a consulting company that builds software and I get paid on the software that I built for them, and oh, by the way, I can sell it to others. Is that a service business, or is that an AI business, or is that a software business? Well, the answer is yes to all those questions. And since we're out about getting returns, we want to think about both those as we think about building a portfolio. So where AI has changed for me is to say that in the past, if you told me I could buy the entity that's going to use the technology, I'd say, no, thank you, rather not. But today I would say, no, I think that's a very thoughtful idea if we can create a really unique technology that can give them an incredible competitive advantage vis-a-vis, the marketplace they're in. Consulting for software, right? Wouldn't want to invest in a consultant for software, but I'd want to invest in someone who's AI forward that really is incredible and can build recurring revenue businesses around it. I'd want to invest in a wealth management business that uses AI to create a competitive advantage for their advisors. That's a difference from where we would have been a year ago. And I think, we'll certainly experiment with that. We have an announcement that we're fees only.
Is that hypothetical?
Hypothetical, exactly what we might be doing today, that is an example of that play. So we'll put those in the portfolio. We'll believe that will help us really learn and grow and understand, how to think through these different trends. And that is part of what early stage investing is all about, is the experimentation and learning that needs to go on.
Great. Dave, when we were in Switzerland a few weeks ago, there was that great kind of academic panel, and the highlight for me, or one of the, maybe not the highlight, but one of the most memorable things was the gentleman who was he was the head of AI at Tsinghua University in China, which I think is the top-ranked university in China. And he had talked about how academia needed to be this place that was free from politics and could foster collaboration, and that our companies would meet in competition, but market forces should decide the winner, which was a wild thing to hear, not ideology. And then he went on and talked about OpenAI and Anthropic, and kind of gushed a bit about the advances those have created for humanity. And then he sort of did what I think by the end was predictable, as he kind of raised his hand. He said, but there's a company in China called DeepSeek, which has produced a much more powerful model at much less compute than OpenAI. And there was kind of a bit of a buzz in the crowd, but people weren't really paying attention. And then, of course, 3 days later, NVIDIA sold off 10%, and it was the whole DeepSeek thing. And we spent a lot of our time sharing reasoning behind why that might be, about how the engineering innovations that DeepSeek used meant that there might be sort of less need for training around training loads for reasoning. There might be less requirements for inference time compute. I would say if anyone who has used deep research would say, well, that's just an absolutely ludicrous blip in what's going on, because these reasoning models are going to require immense amount of inference time compute, and they're immensely powerful and useful. Today, the sort of semi and chip world has been a little bit disrupted. I know you speak to guys like Gavin Baker a lot. What's your perspective on kind of chips and hyperscaler and sort of the data center world, the real physical infra that's driving and empowering the landscape that we spend time in?
Yeah, so much to talk about on that front too. Well, first of all, inference time compute, best guess right now is going to be 95% versus training time. And there's a lot of optimized, customized chip innovation coming out of a lot of places, including MIT, that's going to drive up the speed of inference by, best guess 100x. NVIDIA has a stranglehold on training. The official NVIDIA story has been, well, our older generation, buy our new chips and use the older ones for inference. But that ain't going to happen. These new inference time chips are so much more power efficient and cost efficient. And a lot of people are getting about 4x the price performance out of AMD. For a long time, NVIDIA was saying, well, look, we have this CUDA layer of software. Well, it turns out AI is really good at writing software. What a coincidence. So I'm not so confident that anyone who's got just a technical software defense mode is going to hold up for super long. So, NVIDIA sold out for years into the future. So I don't think there's any, but you saw the stock's down like 8% today on really good earnings. Yeah. So you're starting to see some people wondering, where's this all going? So I think what you can expect to see is the inference time data centers are going to be sold out forever. Like, there's infinite demand. You can always use more inference to create a more intelligent answer.
Yeah.
And a more intelligent answer is always going to drive revenue profits. Also, this is the year that all of customer service and all of telesales moves to voice AI. And voice AI is unbelievably compelling. The voices are crystal clear, super smooth, incredibly knowledgeable. If you're doing complex travel, you're going to get completely out of this ridiculous, web interface. You're just going to talk to an incredibly intelligent AI. It's a much better experience, but it uses a lot of inference time processing under the covers.
Yeah.
And so I think the demand for that is going to be off the charts. And I really, the other thing that's going on concurrently, Moore's Law, when I did my thesis at MIT, it was on the biggest computer in the world, the connection machine. Danny Hillis invented it. Danny Hillis was going to be Jensen Huang, but he was too early to market. And the idea of building massively parallel things like NVIDIA does kept getting crushed by the fact that Intel just got faster. As soon as you got it built, Intel was 10 times faster. And so Moore's Law was just this relentless killer of things like, parallelization like NVIDIA does. Then Moore's Law started slowing down a few years ago. Now it's crawling forward. And now the new Intel fabs, which are brilliant, by the way, are 18 angstrom, 1.8 nanometers. That's, if you take the diameter of a helium atom or a hydrogen atom, that's an angstrom. You take 18 of those, and that's a little feature on a new 18 angstrom chip. There's nowhere to go from there. You can't go subatomic. It doesn't work. So now, yeah, it's all about growing parallel, growing massive parallel data centers. So, and also the cost of designing a chip, the fabs are 30, 40 billion.
Yeah.
But the actual masks, if you said, I've got a really good idea, I want to tape it out and I want to make it, it's only about 100 grand to mask it out and get your prototypes back. And so now I think we're going to see a lot of custom use case chips. It's an incredibly fertile area. And so I think that'll grow like crazy. And those will go right into these hyperscaler data centers. And the data centers are looking for differentiators anyway.
Yeah.
So that's really, really exciting. And so I think you can look forward to an inference dominated world, the vertical use cases being on chips that are customized to the use case. And yeah, there's so much more to talk about on this front. I don't want to go too far.
I mean, it's like, one of the treats of working in our space in Kendall is, there's literally everything you've spoken about, Dave. There's somebody in our office doing it. I mean, like, what was it? Last week, I met the newest like chip designing phenom that you've like literally, in my words, you captured from MIT and gave a desk in the office. So it's
He is free to move about. He's not like locked in.
Sorry.
No, but he's drawn in. Our environment here has become the place people like him want to go. There's nothing else in the Cambridge area that's keeping up with us.
He used to say
we've become like a magnet.
I always love that saying, I can't help it that my grass is greener. That people are happy here and life is good.
Yeah.
We are starting to see the questions roll in from the listeners / viewers. One from the powerful Eva Shaw. Are you seeing an influx of companies pitching their ideas to you? How do you differentiate promising investment opportunities from weaker ones? Beyond AI native engineering capabilities, what are key factors that you're focusing on when deciding to invest in one of these companies? I will, for a change, answer this question, and then if somebody else wants to raise their hand and take another slap at it, please do. I think we might have touched on it a little bit earlier, Eva, but I would say, at this point, kind of AI native engineering skills and the credibility from their background is kind of table stakes for us to get interested. I think it's really about go to market. I think when we think about the companies that have excited us recently, Hats really has kind of go to market baked into its DNA. Selling through the channel, dominating and owning the channel, empowering the channel is really its kind of raison d'etre, and everything feeds through that. We've been spending time with the boys from AI1 who speak the language of enterprise, really understand how to get in the room, sell. Our work with another entrepreneur, which hopefully we'll make an announcement soon, but we were able to walk him into 50 wealth management firms, and he was able to articulate. And so I would say like that tends to, since the engineering piece is table stakes and the technology is so capable that the business models are therefore rampant, it's really about leadership and the ability to sell, I would say. I don't know if anybody else has other thoughts.
The one thing I like to think about is a world in which I can actually code. Like this is a moment for me, right? So I can imagine a world I can say, I have this really great business idea, because as you all experience, I have them like every minute of every day. And yet, like, how do you translate that? Well, I translate that through a bunch of really smart entrepreneurs who are working in a space that my idea is in. but it won't be too long before I can translate that into, the chat GPTs of the world that will code it for me. And so it gets right back to the point we made earlier, which is that the ability to code and technology itself will not be the advantage it was, nor will it be the key skill that we need someone to have. It'll actually be the business idea generation or product generation. And it will be the distribution, right? It's who do I sell it to, and do I have a unique advantage there that I think starts to change the shift. So I love the possibilities of that, right? When I think about what it might feel like in 2 or 3 years, not tomorrow.
Yeah, it's been a great team dynamic change too. I think, Frazer and Nick, you're a good case study in this yourselves. I was teaching at MIT this morning, and a lot of the teams floating around our class are, maybe 2 MIT Core 6s and 1 HBS. And historically, the HBS guy would be doing the strategy and sales, and the 2 MIT guys would be writing the code, and they wouldn't really understand each other. Now AI has completely compressed them into one coherent working group. The HBS guy writes code very easily. The computer science guys are querying the LLM to ask about the sales process, and it's all just one beautiful, tight, coherent working group. And it used to just be that software layer. The accessibility was so hard, and so nobody had the time to get over the hurdle. But the team dynamics are so much better now with everyone on the same page. And yes, like you said, your entry point into building something with AI is actually kind of fun and super fast. And like you said, Frazer, you were playing with Cursor, you're cranking something out in no time. Or anybody on this call can build something in Replit tonight and be just mind blown at what's possible.
Yeah, it's unbelievable. Oh, we got another question in the chat, and I can't read this person's name because it would be super name droppy if I did. So I'll just say, somewhat well-known public figure asked this question. Talk about Dave, talk about the cost of code historically and the cost curve dropping implications.
Yeah, it's crazy. So, I'm a huge beneficiary, just as luck would have it. Like Vestmark, company I founded many years ago, it's in our portfolio, has 18 million lines of source code. It's bigger than Windows NT when that came out. To write 18 million lines of source code with human labor is, about $500 million to $1 billion. So now the numbers this quarter were just blowout great. And it's just because AI is, right now about a 4x force multiplier on your engineering operation and similar on your ops. And rising fast. And so the opportunity to streamline cost, also EverQuote, another company I co-founded and I'm chairman of, public company, stock went up 30% this week on our earnings announcement 2 days ago. What's going on there? Well, it's the same thing. It's just we're very early to deploy streamlining through AI automation internally, and the companies that are laggards and don't get on it are sitting still, and companies that are jumping on the bandwagon are seeing huge operational cost savings. So, rough numbers, I would say, 4x today is a good target. By end of year, at least 20x. And, you can look at it either way. You're trying to reduce cost or you're trying to expand what you offer. The amount of software you can build, we could go on for a long time, but there's so much latent opportunity where the software that does what you really need doesn't exist because Microsoft didn't build it. Oh, wait, now it's dirt cheap to build it. You can actually have a lot more functional software that's much more specific to what you're trying to get done.
I think gonna do last question from the chat, and then I think we'll probably wrap this up because it's so topical. The thing we all pray for, exits. Mark, you have a really, really excellent expression. Or you said the other day, you said, it's like, you can't not pay bankers bonuses for 3 years. They will make the economy recover.
It's like a law of physics.
Yeah, it's a law of
not
physics.
survive without bonuses.
Yeah. As you think about, and, we're very fortunate to get the exposure to the network of private equity behemoths that bring us things that want us to get involved for AI expertise, WealthTech expertise, the sins of your past. And so you really live in this kind of nexus around how later stage companies that might get bought, that might go public, are kind of thinking about the future, how their investors in their cap table are thinking about timelines. What do you see in 2025? IPO window open? What's the kind of the activity you predict?
Yeah, I certainly think the window will be open. Without trying to make a political statement, we've obviously had a pretty significant change of administrations here, and I think we've got an awful lot of noise in the market that is a little bit surprising to people, in terms of just economics and getting road shows done and all those kind of things. So this is a tough background right at the moment because there's uncertainty about tariffs or uncertainty about direction. Again, without trying to make a political statement. Now, you get in Congress some bills that start to get passed, which happened this week, and you get the next round of whatever the tax structure is going to be, and that clarified, which is going to happen in the first half of this year. That opens the door again because it now gives you certainty as to what to do. So I've believed that as soon as we cleared sort of the first 100 days, let's call it, or first, in worst case, couple of quarters, that just the pure legislative work that is likely to go on and because of control of all branches of government that would happen no matter what we might think, that would provide the kind of certainty that the market needs to say, I'm ready to commit capital. There is clearly, we're overdue for that to happen. It effectively has been done. This is now over the third year that we have not seen the kind of M&A or IPOs that we need to see for the economy to function. So we're well overdue for that to start to get back into shape again. I'll just share a little story that when we took LPL public in 2010, it took us 11 months to finally get the stock sold. We followed GM into the market, which I will tell you was tough. They had 2 teams out to our 1 team, and we would literally show up, right behind them in many money manager's office to do it. But we literally had 4 starts before the 4th one finally took because the markets were so uncertain from still the 08 financial crisis. This isn't nearly as bad as that, right? We've had a bit of a downturn because rates have moved. That's a pretty standard economic cycle. So we were really due for IPO roadshows to get going and get back out there and be successful. So I feel very positive about 2025.
Tremendous. I think the other thing that when I was chatting to somebody else today about the ecosystem was I think about all the founders that have built great businesses over the last 12 years that are sort of locked in is the wrong word, but they are captive to running these businesses.
Yeah.
And not only is that going to unleash liquidity for the LP ecosystem, for the venture ecosystem, but it's also going to put more founders out into the wild again, who have had success and experience. So that's going to be extremely exciting in conjunction with the technology shift we're seeing. And we all know where they're going to go. They're all going to go to AI. So,
yep, smart ones all do.
All right. Well, thank you everybody for making the time. For the viewers, thank you for taking time out of your Thursday afternoon to be with us. It is past 5 o'clock. I hope you're having a glass of something or a mug of something delicious, and we look forward to seeing you again soon.
Thanks, Frazer.
Cheers.
Bye.